Ifueko, I'll just continue from our conversation on the FX market, specifically focusing on NAFEX. Now, with the central bank governor's confirmation of exchange rate notification plans, you know, you talked about harmonizing rates, especially mentioning the NAFEX rate. What will this mean directly for the investors and exporters windows going forward?
Considering what he said yesterday, what typically he's talking about is unifying the rate. That is the official exchange rate, which is currently at 360, and sort of unifying it with the NAFEX rate. He's not paying any mind to whatever is going on in the country. It's really just to sort of unify those rates. And, you know, today, 360 essentially, or the official exchange rate is where the budget is actually being benchmarked at. So that will just give more naira into the budget or produce budget. So as far as offshore investors go, or activities with offshore investors go, there isn't really any significant impact, because what we really boost the market now is liquidity over this unification.
So let's go straight to the fixed income market. You highlight, you actually do project persisting buying sentiments in the bonds market specifically. What's driving your projections, Ifueko?
I mean, considering the last few auctions, and now I'm talking about the primary market, and I'm talking about, we've been seeing significant oversubscription. So even though the market liquidity is really low at the moment, what you find is that cash-rich market participants outside banks, right, are still trying to source for this government security. So even go past the bond auction from last week, we've started to see yields decline across board in the NTB space, almost space, as well as the bond space, really because of the demand is heavy. So that's what you're saying, because the auctions can fill this demand.
You've been clear that we're seeing heavy demands. Now, across the curve, which area, which end of the curve are we seeing more interest, longer or shorter dated tenors?
Okay, so because of the really low liquidity in the market, what we found is we've actually started seeing some selling on the short tenor in the Treasury bill space. Where the demand is actually is in the bond space for the across board 2023, 2050, 2035 bonds. So you're seeing the demand spread across those bonds, and that's where we're seeing yields declining very quickly. So we're in the short tenor space, which banks are the major players. What you're finding is from selling, you know, to accommodate the tight squeeze, liquidity squeeze in the market.
So talking of maturities that we're expecting today, Ifueko, there's futures, the NGUS. What will this mean for liquidity in the market?
So typically, when you have an NGS maturity like that, it increases the demand for dollars. The June 2020 today is out $9 billion. So that it's safe to say that most of that demand will be coming into the FX spot market. So typically we expect, you know, demand to rise and a bit of depreciation, as well as clients seek to cover their positions.